Should you buy GameStop stock? GameStop jumped 40% yesterday after reporting its first quarterly profit in 2 years. However, the stock may not be a buy just yet. At current prices, GameStop has a market cap just over $7 billion. The short squeeze allowed GameStop to pay off a lot of debt, and so the company now has net cash of $1.3 billion, giving the company an enterprise value of roughly $5.7 billion. In their latest quarter, GameStop reported an impressive reduction in operating expenses. Cost of sales fell by 8% to $1.7 billion, and SG&A expenses dropped around 16%. This led to $48 million of net profit in the quarter, its first profitable quarter since 2021. However, it's not all good news. Revenue dropped 1% to $2.2 billion, and if we look at the figures for the whole year, the company is doing much worse. Net income for the whole of 2022 was negative $313 million, and adjusted ebitda was negative $192 million, with free cash flow of $52 million. So GameStop is valued at just under 1 times revenue or 109 times free cash flow. GameStop may have gone the way of Blockbuster if it wasn't for the pandemic short squeeze that allowed the company to pay off billions of debt. However, despite paying off that debt, the future of GameStop is still not guaranteed. Its bricks and mortar business model still bleeds cash with gross margins of only 23%. That's even after cutting costs. That might be okay if sales were growing, but there's still no indication of any pickup in revenue growth. Meanwhile, meme traders may have thrown in the towel as the stock has failed to capture the momentum it had previously. Let's consider an optimistic scenario where GameStop manages to get to $8 billion in revenue in 10 years' time, representing 3% annual revenue growth. If the company is able to hit a 10% net income margin, then trade at 20 times those earnings, the company would be worth around $16 billion in 10 years' time, and that works out to an investment return of 11% per year. But GameStop is nowhere near that level of profit, and it's not showing signs of growth either. Management previously spoke of a number of growth ideas, such as in NFTs and Web 3.0. However, none of these ideas were discussed in the latest earnings call, and it's likely they've been cancelled. GameStop partnered with FTX back in September and had to refund its crypto gift card purchases after FTX was revealed as a giant fraud and went bankrupt. So the bull case now seems to reside on e-commerce and collectibles. On top of this, GameStop refused to answer any questions on the conference call or provide any outlook. These kinds of actions don't instill much confidence for the future of the company, and that's why I give the stock a bearish rating. But these are my personal opinions, not financial advice, and I've got no position in GameStop stock. For more detailed investing ideas, visit our website overlookedalpha.com.